So we're good.
So awesome. Yes, we are ready. Live from Silicon Valley, the What It Takes first edition episode of Ask Me Anything. I'm super excited. We have the first two entrepreneurs online already. And the format is I'm going to spend and contribute and share some lessons learned about entrepreneurship here with you guys. But more than that, it's not just about me being presenting or and anything specific, but you having the chance really to ask your specific questions based on your situation you're in, based on your technology, based on your company stage, right? And I can give you some indication about eventual topic titles we would want to address. Like for instance, today I thought just based on the frequent asked question that I had, that maybe we would want to start around the topic of funding. But feel free to ask me really anything, and I'm here to help. I see Lakshmi online and Param online. Guys, do you have any specific questions?
Yeah, I can start with one. I think we're at a point in our startup where we're trying to create an investor funnel, and figuring out which investors we want to target. We feel like we're more in the seed round. So if you can, talk a little bit about how to create the funnel. How do you identify investors that are a good fit for you, and then from there, even reaching out to those investors. What are the do's and don'ts?
Yeah, that's a very good question, and so far that you ask actually about the funnel, which I personally like a lot because building a relationship. So first of all, getting in contact with investors, people who might potentially interested in putting money into your venture, is a relationship, is building a relationship, right? And the relationship, like in any relationship, you must first of all to create this curiosity and engage with them so that it's worthwhile for them to continue and pursue this relationship, right? So how do you do that? Where are you based, Param?
We're based in Redwood City,
Okay, so
California.
you're based in Silicon Valley, and in Silicon Valley, for you there are a couple of things that I always advise entrepreneurs. So first of all is, where do you want to raise money? What territory do you have access to, right? Why do you want to raise money if you want to raise money in Silicon Valley? The reason why I'm saying that is because when I raised money in my last three companies, I raised them a bit around the globe, including Silicon Valley. And what I figured is, in Silicon Valley, because it is such a unique ecosystem, yes, you have a lot of money available, but in order to access that money here in Silicon Valley, you really need to stand out. What it means is not stand out because you're a great entrepreneur, but stand out because the results that you're bringing or the innovation that you're bringing is really unique. So assess yourself really and your company and say, okay, is it what I'm doing really unique? And not just unique to you. So do you have a technology that is tremendously tech driven and is innovating something in an area that is hot right now? What are areas that are hot right now by the end of 2017? Artificial intelligence, machine learning, cryptocurrency, a blockchain, some kind of new sensors with machine learning, artificial intelligence. So eventually some form of specific drones, shared economy. So these are the topics that the market of investors are looking at. Why? Because people, us as an investor, we want to basically double down on things that the future will have a hockey stick effect. If you are coming and you say, I have a new a segmented social network, then the probability of you raising money here is pretty low. Or you say, I have a marketplace and that connects A with B. Or you say you have any kind of something that is existing but segmented. The probability of you raising money from Silicon Valley is pretty hard, okay? Why? Because you are approaching more a business-oriented endeavor, not an innovation-oriented endeavor. Now, it doesn't mean that it's bad, Param, right? But you need to be aware of that. You need to be aware of saying, if I am in contact with 100 investors, am I losing time in a certain location, yes or no? Okay? Or what are the odds of raising money somewhere else with my potential or with my technology, right? So if you go outside Silicon Valley, which could be Texas, which could be East Coast, which could be Europe, which could be Asia, what you have and what we have here in Silicon Valley is you could leverage the brand Silicon Valley to raise actually money, which means, you know, people, Silicon Valley is still very unique, even though we have other startup hubs. But if you go to somebody else, to another location and you say, hey, a dear angel investor in Latin America, in Asia, in Europe, and based in Silicon Valley, this is what I'm doing, this is the team, this is the traction that I have, the probability, the odds of you out of 100, you know, a conversation raising money is much higher than if you have it here and you don't have something that is tremendously hot and tremendously unique. Okay, so this is just from a fundamental approach of, okay, if I have a certain action and execution towards raising funds, where can I increase the odds to basically to get to a potential round? Then the other thing that is relevant, of course, and you were mentioning you are in an early stage, in a seed round, right? So you usually have your family and friends round, then you have your seed round, and then you work towards an A round. Between the seed round and the A round, it's pretty common that you have a bridge round in between, right? So what kind of funding are you looking for right now?
We're looking for more of a seed round. We've already went through a kind of friends and family, almost an early angel type round. We've raised more in the six-figure amount, and so we're looking for more of a seed round right now. Okay. I think the biggest thing I'm struggling with is how do we reach out to these investors and generate that interest, that buzz, right? You know, whether it's, say we have the technology in one of those hot areas, and then the reach out aspect and identifying who may even be a good fit is you know, kind of a gray area for us right now. We're really not sure.
Absolutely agree, and I'm a guy that likes executing against the let's say common activities that everybody is advising. What does it mean? If you ask most of the people here would say, well, you need referral, okay? And having done 2 startups here in Silicon Valley myself, I can tell you, Param, that yes, referrals are awesome, but as an entrepreneur, how do you get the 100th referral? So you know, you are in a situation as an entrepreneur. You say, okay, makes sense, referral, but who can refer you, right? And I differentiate between 2 different approaches, right? One, I call it the general approach, which is the referral approach. Create an ecosystem and a network that helps you referring to potential seed investors. And then you, Param, might say, well, Tommaso, but after 5 or 6 or 7 people, that's it. I don't have way more, but how can I knock on 100 doors? And this is where my activity comes into play. So first of all, let's be aware, who is an angel investor? And I wrote an article about that. You can find it on my blog, WhatItTakes. Where do you find, and actually interviewed also one of the local angel investors. So who are angel investors? Let's break down a couple of things. So angel investors can be everybody, okay? So how can you reach out to everybody? What do you need to reach out to everybody? What I suggest is, and this is what I call the segmented approach, analyze your industry. And you say, Tommaso, this is my specific industry that I'm solving the problem in. The reason why also here it is important that you go deep and you verticalize your approach is because once you start approaching the people that I'm going to break down soon that might potentially be your angel investor, if you have a general approach and you don't have a focus on an industry, you don't use the right trigger words that they're going to listen to. Okay, give you an example. If you have an app for hotels, okay, for the hospitality business, and you approach the hospitality managers, the probability of they listening at least to your pitch is much higher than if you say you have just a general app for supply chain and not for the industry of hotels. So you might want to use and specify a certain industry. So once you analyze what's your industry, and you can follow some advice that I give on my growth hacking talks, leverage really the LinkedIn platforms. And I'm not really a big friend, and this is just my personal opinion, about the syndication on angel.co or the angel investors on angel.co. Simply why in the execution that I've done towards those platforms, again, if you don't have a warm referral, it doesn't really work if you're contacting 100. But if you go on LinkedIn and you analyze, okay, focus and filter based on your industry, focus and filter based on territory. And I told you, maybe you might want to start outside Silicon Valley and leverage the Silicon Valley plus entrepreneurial plus innovation basket that you are bringing to another country, which I did to when I was raising money, for instance, for one of the latest company, Swag. So I approached Europe, breakdown of Nordics, Central Europe, and South Europe, and I approached the Latin America. And my pitch was I went industry specific. Why? Because in the industry, I go to senior VPs and VPs on LinkedIn. Because senior VPs and VPs on LinkedIn or CEOs of in LinkedIn in the industry, they understand your topic. They should understand your topic, which means if I understand the topic, I can relate as a human being towards what you are doing. If I can relate towards what you are doing, I do understand the problem that you are solving. Unlike if you address somebody that does not understand your problem. This is what I say. If I don't understand your problem, I don't listen to you. Why? Because you lost me. Hey, Tommaso, I'm allowing that the tables have a smoother look and feel. Okay, I understand because I'm eating on a table, but I never was in a table business. Okay, so I'm not connected to it. But if you present me something that I can understand, then I say, oh, Varam, this is interesting. Okay, how are you solving it? And if I understand that the probability of keeping me emotionally engaged with this innovation and showing me how you are disrupting it is pretty high. So you want to target senior vice presidents, VPs, CEOs, or CMOs of somebody who is not in Silicon Valley if you have in Silicon Valley business, right? Because then that are in your industry. So what's the filter that you should apply? You should apply industry. You should apply company size. Okay, go for big company size. Okay, you should apply certain topics or hashtags into the filter. Okay, and then you go location per location. And it's not about mass business, but it's really making sure that the person that you are qualifying belongs to a generation and to a certain demography that can allow and have a check between 25, 50, and eventually 75K. Okay? Because if you're raising a seed round, usually the seed round is between 250 on the lowest end, which is still a family and friend, but on the 50, 350, up to 750. And of course, if you get oversubscribed, right, then we are all happy and we drink champagne. But let's be on the realistic side. It's something between 350, right, and 750. So if you have a couple of 50K checks, let's say you have 10 people involved in it, right, in this entire process, and then you start basically already, you know, generating a diversified fundraising approach. So what is the outreach like? On the outreach, you should consider some of the tools that I suggest on my growth hacking talks, keynotes. You can take a look at the growth hacking keynotes that I have. Also in this blog, you will find them, right? And then you have to, and then it's all about how you reach out to them. What's the value proposition? And this is really about the psychology, right? How can you wow them? Okay. So I'm a friend of always step by step. Again, I'm a friend of really bottom up. I'm a friend of really, you know, breaking down the elements of what can drive you to make success and not to talk with general steps. So imagine you're writing a senior vice president that brings home, let's say, $500,000 in salary, right, of a company in your industry that is not in Silicon Valley. What might be interesting to this person? Okay, I can tell you a couple of things. So what might be interesting to this person is the fact that I don't have access to Silicon Valley because I'm not in Silicon Valley, but I do make $500,000 in salary. So with my salary, what I did is already bought my first house, right? Eventually have done a couple of other real estate investments, right? And my kids go to private schools, but innovation, entrepreneurship, disrupting things. Wow, this is something, you know, I'm a senior vice president. Actually, I am a senior vice president, but Param, I'll tell you one thing. You know what I feel what I am? I am actually an entrepreneur. Yes, I never did entrepreneurship, but when I sit at home with my wife and I say, you know what, I should have gone the entrepreneur route, but darling, we bought the house and with the mortgage, I cannot do it. So this is how they feel. When they're playing golf, this is how they feel. They feel themselves as entrepreneurs because they make some certain money. So you should leverage that. You should go in the message and you should say, hey, I am an entrepreneur. And I work in your industry that we are changing. And I want to connect to don't ask for money, obviously, right? I want to connect to get your thoughts based on your experience, okay? Now, you should not have only one message, right? One copy. Try different copies. A/B test the copy. One you ask basically, but what you should always use, Param, is what I call 3-4 triggers in the copy. What are the triggers? Location, title, industry. These are at least the 3 triggers that you want to use in the copy, okay? Hey, I want to talk to you because you're a senior vice president in New York City, in the industry of, and you understand I'm an entrepreneur in Silicon Valley, okay? And I want to plug into your brain. So this guy is not contracted. This still is a growth hack, if you so will, that not everybody is doing, right? So he might say, yeah, I have 60 minutes for you, right? So what you are causing is a wow moment. And the wow moment is the following moment. Again, imagine the senior vice president at 7 p.m. in the afternoon, wife has cooked, yeah, he's at home, and he say, hey, Mary, you know what happened today? An entrepreneur from Silicon Valley wanted to take my brain. Guys, this is what it is, right? And here you can build a pipeline. And of course, it's a numbers game, okay? But at least you have now a path towards building up numbers, not only on a referral way, but also throughout your engagement, right? So, and this is something that worked pretty well for me. This is something that I've been seeing from entrepreneurs who execute out of the box that works pretty well. And then you can build, and this answers now your question, you can build your pipeline, right? And then it becomes more or less almost a business development approach, right? The way that you can approach multiple people. This will give you the confidence, Farah, that you don't have just, you do not just depend on people that will refer you somebody, but you actually can work towards something smartly, elegantly, and actually, you know what? You are going to create many wow moments that people will say, hey, thank you, Farah, that you contacted me, because they're not contacted from the everybody. So the question that you have to solve yourself, the response to yourself is, do you want to do the same things that everybody is doing in a certain ecosystem? For instance, in Berlin, in Israel, in Ireland, in Japan, in Silicon Valley, and contacting the whom is whom of angels? Oh, you could try, right? Do it, right? You know, gather the experience yourself. But if you want to increase the odds of you raising money and being very tactical in raising money, especially seed round, this is the way to go. Next question. One more question. Yes, one more question. It's 11 already. One more question. Does it answer your question, Farah?
Yeah, that was a fantastic response.
Awesome.
I have a question here. How do we approach investors we already know, maybe friends, or we have worked with them in some other voluntary organization, but we haven't, they have not invested in our startup in the past?
Yes. So what I sense, the question has two things. So one is how we approach people we know, correct?
Mm-hmm. Yeah.
And did you say how we talk to people that have never invested in the past? Did you also say that?
No, I didn't say that, but yes, that will be helpful too.
Okay.
But I'm more interested in people we already know, how to approach them. The reason I'm saying we approached one or two people we knew, and I have worked with them in the past in some voluntary work. The response we got was not exactly what we wanted, so we wanted to find out what would be the right way to approach in that case.
What kind of a response did you get?
They said maybe we were a little early at that time. They said it's a little early. I invest a little more than what you're asking for. Okay,
fair enough. I mean, definitely the requirement. Or let me step back a second and share with you some advice on when to ask for money. Okay. And again, there is another article that I wrote. What is the ideal moment that you can raise money easier? Okay. So this is what happened. Come up with the idea. And then, especially for those who are in Silicon Valley, with the idea, you say, okay, I want to raise some money. You read that you have to build some form of an MVP, and everybody, advises you to do some form of an MVP in order to make something tangible. And what you do at the same time, as an entrepreneur, you start talking with potential investors. You start approaching potential angel investors and so on. Most of them, while you're building your MVP, will say, well, this sounds great, but you know what? When are you releasing your MVP? Well, I'm releasing your MVP. Give or take, give me another 12 weeks and I'm releasing the MVP. Oh, Lakshmi, you know what? Why don't you come back when you have the MVP? So I want to take a look in your MVP. And Lakshmi goes home and looks at his wife and says, you know what? He told me it's great. And he wants to see me when he has the MVP. So Lakshmi has the expectation that he becomes, because you have the MVP. You have fulfilled the milestone that people said. But actually, if you translate what they said is, you know what, Lakshmi? I'm not interested right now. Do your stuff. Yeah, keep me posted. So what I would like to advise is read through the lines, because if somebody is interested to put money in, it's now. I would say never, but it's now that you need it. And there is a certain tactic that you have to approach. So when do you raise money? When you still have an idea in the ideation phase, it's just about the idea and you guys as the entrepreneurs. I give you one example, okay? Imagine that I'm building a glass, okay? One of those glasses that Param had on right now, right? But the glass has wings. What's the problem that it's solving? You know, the problem that it's solving is that when I put the glasses somewhere, I don't know where they are. And so with the wings, they just come back right at my eye. So you know what the kind of a new business model that I can create? I can throw the glasses fly, and then they come back right on my eye. This is what I'm doing. And you look at me and you say, well, Tommaso, you know what? I think you are nuts. And I say, hey, Varun, Lakshmi, this is what I'm doing. And we are disrupting the world. And again, imagine that everybody throws it and the alarm break on your eyes. And you say, I'm not sure if this behavior is going to happen. And I go to keep insisting it. So what I want to convey here is that it's just about the entrepreneur and the vision and the belief that he's making it. So if you don't have anything, if you don't have this MVP, it's still about the way that I'm conveying it, the emotions that I convey, and the capability that I have of selling you the story, right? Now, if people would say to you, come back with the MVP, you know what's going to happen? Let's stick to that. An MVP is a minimum viable product, which means it always sucks. It's always broken. Imagine me with the glasses, and I throw the glasses, and one wing doesn't work, and boom, it falls. What is it that they're going to say? Oh, Tommaso, you know what? I told you to come back when you have your MVP, but you see, it doesn't work. You know, come back when you have the next version. So you start getting into a loop of MVPing and adjusting that for you as an entrepreneur means time and money. And as far as I've taken a look the last time, is entrepreneurs don't have money in an early stage, right? So if you get in the loop of keep on developing and developing and developing, right? The probability of you raising the money in a seed round is pretty hard. So the best time to raise it is actually when you don't have anything yet, but what you can create is a buzz around your product, which I also break down in Start Before You Start. Those who have seen my demos in the keynote, you know, start gathering a lot of data and a lot of signups from people, because then you have your vision, the data, so you have already KPIs, but you don't have the product. This is the best time to raise it. Because if I come to you and I say, hey, Lakshmi, I don't have a product on the market, but I have already 9,000 downloads like I had with the Swag app, people say, oh, 9,000 downloads? Okay, you don't have the product? Well, there is a movement. I want to start doing it, okay? So the approach of you must be aware of the phases, right? Then once you have the product, you must be aware that it's all about connecting the dots. Okay, so once you have the product, now I have the product on the market and I have to improve it. Connecting the dots means what? Two things. Keep on improving your product, which as a consequence, you should have basically an increase of any form of KPI that shows that you're delivering a value. Engagement, downloads, signups, revenue, letter of intent. So once you have the product, the connecting the dots is, and now I'm responding directly to your question, is what investors want to see. You don't go to the investor and say, hey, John, how about you putting 50K in here? You say, hey, John, look, we started 3 months ago. I have 3 letters of intent. Oh, interesting. Thank you for the update. And then in 3 months, you go back, hey, John, remember the 3 letters of intent? We converted to customers and we have 40K in revenue. So you have to make sure that you connect the dots. You keep it basically, you nurture the information throughout a period of time. And then it comes a moment, and this is the challenge, right? Because you have to you make your product better and at the same time increase your KPI. And then it comes a moment where you have to create some form of FOMO, fear of missing out, right? So imagine you send them 2-3 emails throughout a period of time of 4 or 5 months. And the emails all signalize a real improvement, real growth, okay? What I mean with real growth is, you know, if you say, oh, we closed the partnership with, well, interesting, but, you know, what does it mean for your company, the partnership, right? Oh, we have now APIs in my product. Okay, great, but what does it mean for the business model, right? So what I mean with real growth is tangible KPIs. Again, there is a second deck that I have out there, storytelling and pitching, where I break down on the traction side, what is the soft traction and what is hard traction. You might want to look at that, okay? So then you start building basically these KPIs that you deliver, and then you create a FOMO. And the FOMO is always something like, hey, good news, we are raising our seed round, and 50% is committed, and we are planning to close in okay, so FOMO is, what are the triggers? You have 50% committed, okay? You are offering to join the round, so you make them contribute towards your round, right? And then you go into the details. So people say, oh, okay, now or never, I'm losing something. And then you have basically to keep on pushing. So from a pipeline perspective, and now I respond a bit, you know, the flow between Param's question and Lakshmi's question. From a pipeline perspective, you build a pipeline of people, okay, that they start being interested. You start plugging into their brain. Now you have 100 people in your pipeline. You start basically nurturing them on a very simple way, without taking too much time. This could be via video. Okay, you can use something like useloom.com, or you can use something like a BombBomb app, or you can use something like grow.com. These are tools that show either growth or through KPIs, the transparency, or they show basically you talking again with the person, right? And you can put it on autopilot. And then after a period of time, you know, 3, 4, 5 months, depending on how fast you grow this, right? Then you create this momentum of FOMO, and you can raise the round, right? Does it answer your question?
Yes.
Cool. How was anything else, guys? It's 11:15. I super enjoyed sharing with you. Any last question you guys have? Did it help you?
Mm-hmm.
Yeah, very much. I think we got real advice.
Awesome. Hey, cool. Thanks for joining this episode number 1. The nice thing about the digital world is that you will always be part now of the episode number 1, you know, and I will announce some next episodes. You have my contacts. Feel free to reach out. More than happy to help. And hey, good luck with your endeavor, guys.
Yeah.
Thank you so
Thanks,
much.
Tommaso.
Bye.
All right.